Welcome to our audiobook. We appreciate your kind support through subscribing and give us a like. Are you finding yourself living paycheck to paycheck? Are you experiencing significant stress due to your financial situation? These circumstances can often lead to feelings of uncertainty and pressure. Money Hack by Lisa Rowan will guide you hacking your way to financial independence in order to get your life on track. The 275+ hacks in Money Hacks will help you get started today with improving your money management. Money Hacks will teach you how to make small changes that help you save money without even noticing, stop overspending, even on things you think you need, choose the best repayment plan to finally tackle those student loans, make the most of your credit card by learning about rewards and more. This book had split into 6 parts. Part 1, Curb Mindless Spending. Part 2, Be a Savvy Saver. Part 3, Get Debt-Free. Part 4, Make More Money. Part 5, Plan for Future. Part 6, Protect Your Money. Today, we will talk about Part 5, Plan for Future, and YouTube link of the other part will be updated in below description. Stay tuned and subscribe us in order to get first-hand notification. Hack 192, Blow Out Your Money Candles. Everyone wants to set big new goals that start on January 1st. But when it comes to money, the start of a new year might not be the best time to make a resolution. You've just completed a year's worth of financial transactions, and especially after the holiday season, your wallet might be feeling a little drained. Instead of making a financial resolution for the new year, set money-related goals each year on your birthday. Hack 193, Go on a money date. Couples can choose to manage their finances in a variety of ways, but whichever you choose, there's one necessary requirement: you need to communicate. If you don't talk about your money, you won't be able to make smart financial decisions as a group. That's why it's important to have money dates with your partner. Hack 194, Emerge with Caution. One of the biggest decisions in your life will be whether to marry and who to do it with. But before you tie the knot, it's worth talking about how you'll manage your money as a couple. Couples benefit greatly from discussing their preferred financial management system before they walk down the aisle. Hack 195, Choose equitable over equal. If you decide to share expenses with your partner, you don't have to split everything 50-50. Each share of the finances doesn't need to be equal if there's a noticeable difference, but it should be equitable. For instance, say you make $60,000 per year and your partner makes $40,000. To make those salaries work for your household budget, you should pay 60% of the expenses and they should pay 40%. Hack 196, Determine your investing risk. In general, stocks are riskier investments than bonds, but their volatility can bring a larger return, which means more money for you. How much is enough of each for your portfolio? An easy way to determine your balance of stocks to bonds is to start with 100 and subtract your age. For example, if you're 28, you might invest up to 72% of your portfolio in stocks, with the remainder in bonds. Hack 197, Go Mortgage Hunting. There are 2 steps to the process of getting qualified for a mortgage. Step 1, Get pre-qualified. It only takes a few moments and gives you an idea of the amount of mortgage you may be able to get from a particular lender. Step 2, Get pre-approved. If you like the rates a lender offers, you can get pre-approved, which means you'll submit to a full examination of your credit and finances. Hack 198, Get financially fit. Some companies go a step further and offer financial wellness programs for their staff members. The programs can take many forms, including access to financial counselors or financial planners, retirement planning workshops, access to financial management platforms, online lessons for topics from budgeting to investing, and even debt management programs. Employers offer such programming because it's widely known that money is notorious for causing high levels of stress. Hack 199, Get free money from your boss. After taxes and other deductions are taken out of your paycheck, you might feel like you don't have enough money left to be able to save for retirement. But if your employer offers a 401k plan with a match, you're missing out on free money. Having a 401k is already a smart move because it's a tax-advantaged retirement account. Your contribution gets funneled over to your retirement savings before taxes are taken out of your paycheck, so once you get used to the adjustment, you won't even notice that your checks are a bit smaller. Hack 200. Don't watch the market. Knowing the latest stock market movers and shakers makes you sound brilliant when you're chatting around the water cooler. But knowing too much about what's going on in the markets could negatively impact your portfolio's growth potential. When an event is fresh in your mind like a stock market dip, you're nervous that it's going to happen again. And that could convince you to change your investment strategy to be more conservative. Hack 201. Start with a robo-advisor. Robo-advisors are digital platforms that provide financial planning services, but instead of working with a human through your computer, you work mostly with the computer itself. Based on your needs, the robo-advisor can help you manage your portfolio and work toward your goals. Hack 202. Pay taxes now to save later. While 401k tends to be the default option for employer-sponsored retirement programs, you may be able to choose a Roth 401k. While you contribute funds to your 401k before taxes, you put after-tax money into a Roth 401k. But then, it's tax-free from there on out even when you start taking out money for retirement. Hack 203. Use your investment time machine. Want to give your IRA an extra boost? Contribute to last year's limits. IRAs allow you to contribute from January 1st through April 15th of the following year. That means that if you're doing your taxes in March, you still have time to put money in your account and have it count for the previous year. Not only does this help you maximize your savings for each and every year that you have an IRA, it can also give you a boost if you get a raise or have another windfall. Hack 204. Work for yourself? Don't forget to save. Just because you don't have access to an employer-sponsored retirement account doesn't mean you can't invest with similar tools. There are a few retirement accounts available especially for you, and they're easy to get through a regular investment brokerage like Charles Schwab or Vanguard. Hack 205. Invest in the 5% rule. You've heard that you should diversify your portfolio, but how varied do your investments really need to be? Play it safe with the 5% rule of investing. The rule states that no more than 5% of your portfolio should be locked up in one particular investment type. Hack 206. Choose a target. Perhaps you're looking at different types of mutual funds you can choose for your portfolio, and you're just feeling overwhelmed or confused. No need to fret, there's an easy solution to get your money invested ASAP so it starts to grow: a target date fund. All you have to do is pick the fund that's close to the age you think you'll retire. Hack 207. Double your money. Do you know how long it will take your money in an investment or savings account to double? It might have never occurred to you to even wonder. But a simple equation could help you determine if your money is in the right place based on your financial goals. It's called the Rule of 72. All you do is divide 72 by the interest rate for your savings account. If your interest rate is 2%, it'll take 36 years for your money to double. Hack 208. Celebrate your money anniversary. Find a happy medium by reviewing and rebalancing your investment allocations once each year. It doesn't matter when you do it, it just matters that you make time to regularly review your portfolio. Hack 209. Don't overlook money market funds. The trade-off for not subjecting your money to a lot of risk is that money market accounts don't provide a huge potential for return. In fact, they're often close to the same rate of growth you'll find for high-yield savings accounts. The difference is that money market funds earn dividends. When you buy shares of a fund, you're basically giving a short-term loan to an organization. When that company or government pays back the loan with interest, you get that interest as a dividend, which you can withdraw as cash or reinvest into your fund. Hack 210. Don't forget to actually invest your money. It's a big misconception that once you set up automatic contributions to your 401k or IRA, your work is done. But it's really just beginning. When you contribute cash, it sits in what's called a settlement fund until you decide what to do with it. Since your settlement fund is a money market fund, it earns interest, but only a small amount. This money isn't invested in stocks, bonds, or anything else. You have to choose how to invest those funds. Hack 211. Become a home buying pro. If you're thinking about buying your first home in the next few years, take advantage of free first-time home buying classes. A class can teach you the lingo you need to know and help you qualify for first-time homebuyer programs that can save you money on your first place. Hack 212. Keep company stock out of your portfolio. Your retirement account is sponsored by your company. Why not fill it up with your company's stock? This is a bad way to invest. You already spend 8 hours a day working there, at least. Don't invest twice in the company by holding a bunch of your company stock and hoping business stays brisk. Hack 213. Ask your employer for lower fees. Your employer's 401k options may be limited to a few dozen fund options. That might give you enough flexibility to choose a direction for your investments, but what if all the expense ratios look too high? It's worth asking your employer if there are other options for you. Hack 214. Ditch PMI ASAP. If you make a down payment on a home that's less than 20% of the cost, you'll need to get private mortgage insurance. This kind of insurance protects your mortgage lender if you skip out on your loan. It usually costs up to 2.5% of your total annual mortgage each year, but you can get rid of it once you've paid off 20% of your home's value. Hack 215. Go on a retirement treasure hunt. How many jobs have you had since you were 18? Even if they didn't all offer retirement plans, there's a good chance that you've had at least one 401k under a previous employer. If you're not sure you took care of that account when you left your job, it's time to double-check your history for lost 401k accounts. Doing this is important because you may have had a job in the past where your employer contributed on your behalf even if you didn't. Hack 216. Wed wisely. Can you guess how much a wedding costs in the United States? The average is about $30,000, with weddings in pricey places like New York City and Miami coming in with much higher averages. But just because you want your friends and family to witness you committing your love to one another doesn't mean you need to break the bank to do it. Hack 217. Get vested. When your employer puts money in your retirement account by matching the amount you contribute, it doesn't mean you have the right to that money right away. You may hear the word vested used by your company's HR department. That's a word for who owns your money. If you're fully vested from day one, you can take every penny that's been contributed to your 401k by you or your employer whenever you leave. The vesting schedule probably isn't the sole reason to take or leave a job. But if you've been thinking about a career move in the near future, it's worth checking your vesting schedule to make sure you'll get to keep all the money you see in your 401k. Hack 218. Don't rob your retirement. Often parents, wanting the very best for their offspring, take early distributions or loans from their retirement accounts in order to help with college costs. But doing so puts you at a severe disadvantage, and it is a similar option that you take out loan to fund your retirement. So, play it safe and prioritize your own retirement savings over their college fund. Hack 219. Save for graduate school. Did you know that you can benefit from a 529 plan even if you don't have children? You can use it to save for your own education, whether it's graduate school, continuing education courses, or a career change that requires additional training. Contributions to 529 savings accounts are exempt from federal taxes. Every state offers at least one option for this type of savings account. But beware, if you withdraw these funds for a use that's not educational, you'll have to pay a 10% federal tax penalty. Hack 220. Prepare your baby for college costs. Even though you may, and should, prioritize your own retirement savings over your child's education fund, you can still make it easy for your family to save. Savings plans called 529s are investment accounts designed specifically for education expenses. Adults typically open them for their children, grandchildren, or other young relatives to help them save for college, but if you're over 18, you can also open one for yourself. Hack 221. Aim for 80% in retirement. How much money do you need when you retire? The reason it's so hard to determine the right amount is because it's different for everyone. Experts say to plan for a yearly retirement income of 70% to 80% of your pre-retirement income. That's because you'll have fewer expenses. You won't be commuting to work every day, for starters. Hack 222. Save money on financial planning. Maybe you're ready to work with a human versus robo financial planner, but you're worried about the cost. One of the ways you can get the most convenient service possible and save a bit of money is by working with a virtual planner. Hack 223. Make sure your money lasts. If you've done everything right on your way to retirement, when the day finally comes you might feel like you deserve to splurge with a bit of your well-saved money. But there's a rule of thumb you should follow for your retirement account withdrawals if you want to make that money last. Experts advise that you withdraw no more than 4% of your retirement funds each year if you want to make sure your money lasts for 30 years. Play around with this math, and you'll get a good idea of how much money you really need to save for retirement for the lifestyle you want. Hack 224. Create a backup investing account. If your employer offers a health savings account, HSA, in tandem with a high-deductible healthcare plan, it may be worth considering, even if you think you're healthy enough not to need this savings account. When you contribute money to an HSA, you're not required to use the funds in a certain time frame, like you are with a flexible spending account. But while you're waiting to use these funds, you can hold them as cash or invest them like you would contributions to your 401k or IRA. That means you can basically use your HSA as a backup retirement account. Hack 225. Protect your finances with a fiduciary. When it's time to work with a financial planner, it's important to find one that intends to take care of your money. CFPs and Chartered Financial Analysts, CFAs, come in two main varieties: fee-only planners, who charge you a flat rate for their services, and commission-based planners, who earn a portion of the financial transactions they make on your behalf. Fee-only planners pledge to act in your best interest, monitoring your money and helping you make decisions regardless of whether the decision will benefit them. They earn their income based on charging a flat or hourly rate, or from a percentage of your assets that they manage. Hack 226. Let your money be boring. Your money should be boring. Financial experts tend to agree that the best way for your portfolio to grow is slow and steady over the course of many years, not with wild ups and downs that make you sweat. There is no secret that, if followed, will make you rich now and long into your golden years. Hack 227. Lock down your credit. If you're even considering buying a home, get serious about your credit score. Get your score as high as possible, then maintain it, even for as long as 1 to 2 years. A boring yet healthy credit profile is exactly what lenders want to see when considering your mortgage application. Hack 228. Get your FICO mortgage score. There are many different ways to calculate a credit score. But you can reduce your chance of surprise if you have a good relationship with your bank or credit union. Going this route can help you get your score without paying for it. Ask your banker if they can access your FICO score specifically for mortgages. You may also be able to request your score for free from a housing counselor that's approved by HUD. Hack 229. Request a rapid rescore. If you've been working hard to boost your credit score, you may have noticed it can take a while for paid debts to reflect in your score, sometimes up to 45 days. But if you're anxious to start the process of buying a home, you may be able to accelerate the process. It's possible through what's called rapid rescore, which is typically used to correct credit reports that have errors. You can ask a lender to do that if your score isn't matching up where you think it should be. Hack 230. Make a big down payment. Even if you plan to make a small down payment on a home, you can use the savings you've built up for closing costs or even moving costs. Some lenders want to see that you have a few months of mortgage payments on hand before granting a loan. In fact, it's common for lenders to ask for copies of your tax returns and bank statements when you apply for a mortgage. The process of account verification allows them to see not just how much money you have, but also how long you've had it. Hack 231. Pay points now to save later. Maybe you already have a solid interest rate offer for a mortgage, but you'd like to pay even less interest over the course of your loan. It might be possible if you have extra money you can use to buy points. Hack 232. Figure out your PITI. The people who tell you that you could have a monthly mortgage payment for less than your rent may not be looking at the right numbers. To get a better idea of how much buying a home would really cost each month, you need to know your PITI, which is principal plus interest plus property tax plus insurance. Hack 233. Buy a house for less. Finding an affordable home to purchase can be a long and frustrating process. Looking at foreclosed homes may open up new possibilities, but it also comes with risks. To get started without getting overwhelmed, look for homes that are in foreclosure in your area on homepath.com. It's a program from government-sponsored mortgage company Fannie Mae that helps it sell the homes on which it has foreclosed. Hack 234. Save thousands on your mortgage. Once you sign all the paperwork and finally get to hold the keys, you might hope the stress of buying a home is over for a long time. But paying attention to mortgage rates in the months and even years after you buy could help you pay off your home faster by refinancing. Of course, a lot depends on the market and how interest rates fluctuate. Talk to a mortgage broker to get an estimate of your potential upfront costs as well as a rundown of the potential savings you'll reap down the road. Thank you for your time spent with us. We hope you enjoy our audiobook. We would grateful for your kind support. Subscribe and give us a like. Stay tuned on our next audiobook.